Welcome to the September 30th, 2019 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowanGroup, and your financial weatherman with the fast-paced tour of this week's global financial markets in preparation for 2020, just 60 business days away as we enter the fourth quarter of 2019. Look at this. Well, that's a Dow Jones Industrial Average. Dire political headlines and infighting out of Washington. Lots of name-calling, more than I've ever seen in my history. What was the impact on the Dow? Nothing. The Dow finishes the week having traded above 27,000 and up a little bit for the week. Does it mean anything? Notice the range-bound market, which we began to forecast back here. And we saw the 22,000 Dow, whoa, at Christmas. But this says the political headlines are being ignored. And maybe Washington should be ignored as we plan our 2020 portfolios. Let's look at the earnings, because earnings drive the stock price, because earnings eventually drive the value of a company. It's good to make money as a company. So, somewhere between $35 and $40 net after-tax earnings for the block of S&P companies which are trading around 3,000. That's 15 to 20 times earnings. But you could see we've been in kind of an earnings drought. Some would call it a recession. Whoa, earnings recession in 2019. And the next quarter is about to be released in October. That'll be big news because it's going to tell us this rosy forecast by the analysts, who tend to be a little too rosy at times, is this going to come to fruition? If so, it bodes well, or reasonably well, for 2020. I will note that the U.S.-China trade negotiations being set for mid-October corresponded to the Dow trading above 27,000 on the final trading day of the week. Boom! What's the Fed gonna do? Well, we have a special translation of the Fed language of the most recent report at NetWorthRadio.com. And in their learned pomposity, they were going to raise rates all this year. And what have they done? Well, they cut twice. Okay, so what are they going to do next year? The Bloomberg forecast has been a pretty good, reliable probability indicator of what the Fed's going to do. 56% says, well, they're going to stay about where they are at the next meeting. That's October 30th. And the probability that they're going to stay there goes to a minority. It's actually more likely that they would cut a little bit on interest rates going into 2020. What does that tell us? They're not a factor is a key part in the current analysis of the Fed. What are the projections? It is 2% as far as the eye can see. 2% growth descending to 1.7 next year. Slower growth, decrescendo. But that's slow, steady, just a little less growth than what we had. And we're seeing that in housing, by the way. The price of your house up about 3% over the past year. That's normal. For a 20-year average, the price of your house has gone up about 3% on average, the most recent figures. But let's look at this. Inflation, around 2%. That's right at the Fed's target. Hopefully they'll be happy. Core, which is a little bit different indicator, without unimportant things like food and energy. You got to knock those out. Well, that's a little bit less. But anyway, 2% as far as the eye can see. That's both the Federal Reserve and other economists in Bloomberg. That's not a bad forecast. It's kind of slow and boring with scattered surprises. Whoa, I don't want to be here. Oof. This is two money-losing IPOs. 80% of the IPOs this year, initial public offerings of stock, were by companies that lose money. And some of the companies like Lyft and Uber have shown that they're capable of losing up to $1 billion every quarter. Okay, so they're about half price. If you look at their high trade after the IPO and where they are right now, they both approached, well, half price this week, and that's probably not cheap enough if they can't figure out how to make money yet. Peloton. Well, that sounds good. We all get fit. We get on the bike. Never mind that if you're in a studio, you have to look at somebody's backside, but it seems like a good idea because you get streaming and you get cool videos and you get to pretend you're riding through the Rockies. Well, it IPO'd 29, never saw it again, 28 the high trade, now 24, and this is just in the final 2 trading days of the week. Peloton also losing money. The investment bankers like to get these things foisted into index funds at a high price when they can get it done. So WeWork is canceled, by the way. What happened on the pot stocks? This looks pretty much like a Bitcoin chart. You can see pot stocks as a group were hot. They went from 56 on this index to 180. So about a 3-fold gain for the pot stocks. It goes parabolic. When you see y equals x squared parabolic on a chart, you want to wonder what's going to happen next. Ooh, it's not good. It's actually y equals, well, anyway, we'll get to that equation in a future episode. But we have an asymptotic decrease, and pot stocks were way overvalued compared to the money they're making, but they were growing. And they were growing lots of pot too. But they went from 180, now that index 93. So it's been chopped in half. We'll keep you posted, but when you see a mania like this, much like Bitcoin at 20,000, and everybody wants to do it, that's probably about the time you say, hey, I need to look for something else. What's already been through a bear market cycle that's starting to see big increases in profits? Energy infrastructure. World natural gas consumption on a steady uptick for the emerging nations, going from 60 to 120 in a 40-year time period here, according to the EIA. Boom. Okay, natural gas consumption by region, and we see that that's gone to a double in natural gas consumption. What's going to be the biggest component? Because they all don't have gas wells. Guess who does? The United States. Liquid natural gas is going to play a big part of this, and we're already seeing that in the pipeline flows. Look at this. The United States natural gas production, whoa, bigger than every other region. That's good news for the United States, trade balance, all those things. The Middle East, it projects a rise, but they're actually down over the past 2 years. What are we going to do with this? Well, we're going to highlight 2 categories: global high yield bonds for fixed income, along with strategic use of cash, depending on how conservative you want to be, and energy infrastructure with a nice dividend and capable of large price gains over an extended period. Both of those, global high yield, energy infrastructure, have price risk. If you don't want price risk, you can still get about 2% in a money market, and maybe a slice of all 3 is a good way to start your plan by going to networthradio.com, fill out the preliminary client questionnaire, come down, meet the team of 10 who cares, and go to networthradio.com, meet the team, and you'll see all of us and our qualifications on the updated website. Thank you for tuning in. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast. That has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as networthradio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.